Mumbai's sales boost and national trends. Registration of properties in the Mumbai municipal region rose about 12% to just over 13,000 units in the month of April. That's last month on better housing demand, according to real estate consulting firm Knight Frank India. April 2024 saw about 11,648 units. Knight Frank said that Mumbai city recorded 13,080 property registrations in April, and in March 2025, the total registration stood at about 15,000 units. But for April, apparently this was the best April in about 13 years in terms of property registrations. Now, Mumbai's strong sales numbers do not necessarily reflect a national trend, and numbers appear to be diverging between and across markets and cities. I reached out to Ghulam, Senior Executive Director, Research Advisory, Infrastructure and Valuation at Knight Frank, and I began by asking him to give us a sense on overall trends this year so far and his outlook ahead.
At the macro level, it suffices to say that things haven't changed much if we talk about last year to current year. While a lot of them want to start talking about a downfall in real estate, it hasn't yet been so visible. If I talk about mega trends in terms of cities, it is essentially NCR and Bengaluru where we are getting some sense of cracks appearing. But these are again superficial because it's too soon to conclusively say that markets are changing even in those two cities. But the other cities like Mumbai and Pune are coming up with very different perspective. Number of transactions are huge. Chennai and Hyderabad, actually Hyderabad is also slightly softening, but Chennai is doing well. So different cities are behaving differently right now. So there is no one trend fitting all cities. That's one part. But in terms of product type, the luxury continues to be the flavor of the day, which defies even the regionalities. Like luxury is doing well in Gurgaon, in Delhi. Luxury is doing well again in Bengaluru. And of course, in Mumbai and Pune, luxury is doing fantastic, fabulously well. So luxury is one segment which is kind of eating into mid to low end of the market because every developer worth his salt is actually shifting to the low hanging fruits and trying to enjoy the benefits of doing luxury where it is selling like hotcakes. But low end market, nobody is touching. So affordable housing is the biggest loser in this entire game of luxury markets going up. And that's where I am worried because in times to come with Pradhan Mantri Awas Yojana 2.0 already rolled out in last October 2024. And now the home loan interest rates are softening. So with these two, of course, the interest rates are impacting the lower end of the market the most. And the reason why the transactions are not picking up, one of them was interest rates going high. Now that it is softening up, as well as Pradhan Mantri Awas Yojana benefits are also coming along, I'm worried that in times to come, there'll be huge demand for luxury housing, but no supply because every developer is catering to the upper end of the market alone. So these are a few key trends I wanted to bring up to you.
Right. After a while, or that you're seeing this kind of variance between cities and city pairs, like you talked about Mumbai, Pune, Bangalore, NCR, and Hyderabad, which is on a slightly different path. Because usually all cities were, at least for a couple of years, seem to be all moving in the same direction.
Yeah, which was true. When things are falling apart, pretty much every city was going through a tough time. But NCR has actually had much longer a recessionary period than other cities, whereas Hyderabad had actually moved out of those shadows after settlement of political issues, etc. So last 7-8 years were good bumper years for Hyderabad because it was kind of starting afresh, kind of starting with a new chapter altogether. But even there, a fatigue has crept in. So while you're right, more or less, most of these cities do, gradually tend to behave in a same manner. But this is that time when there is a little dynamism because this is a signal that the markets have saturated in times to come. You need to worry about the cycle changing. And it is right now appearing in, as I said, NCR and Bengaluru. In times to come, other cities may also follow suit. So this is what I want to tell you, that this could be one of the early signs of fatigue creeping in the market.
Right. Mumbai seems to be not seeing any fatigue because you've had 13,000 registrations last month. How are you seeing Mumbai? Is it powering ahead on a completely different trajectory as compared to other places?
Well, here I would also want to highlight why Mumbai has been doing so well on the luxury side of it. Of course, it was huge amount of wealth created on stock exchanges, on equity markets, etc. So a lot of those profit bookings have flown into real estate. But last 6 7 months have been different on that front. So again, I'm worried from the demand side. Supply side, of course, is going great guns right now. But how long will it last is a concern. And in my view, the way things are poised, I don't think it will continue the way it has been going on for last 2 3 years. So signs of cracks may not have been evident yet, but it's a worrisome situation because there is a limitation to the demand that we always thought. And every developer, typical herd mentality is focusing on super luxury, the upper end of it. But there will be a limit to how much of demand would you have there. And that is already, there are concerns rising in that direction.
Right. And if I were to now ask you to give us an outlook for the next few months, which is a little more composite, what would you say? As in, where are you feeling optimistic if within this, and where are you not feeling so optimistic?
I'm not really thinking of much changing in next quarter or two. Because even if it's an early sign of some slowdown in a few markets, I would say I have to really look at rolling averages of last 8 10 quarters. I can't just talk about one quarter because it can be an outlier. So I would watch out. I don't want to believe that there is much of a change happening in a quarter or two. Maybe 4 5 quarters, things may start slowing down very, very prominently and conspicuously. But for the moment, we have to pick up those small changes, small signals emanating from here and there. And those signals are talking about slowdown. But otherwise, at a macro level, things are going pretty steady for real estate industry per se.
If there is a certain sense of consistency, is it because more of it is being driven by investors, or is that number changing in any way?
Well, it still is not too much of an investor driven market. Let's be clear. Because the kind of pricing, in any case, last 2 3 years, the price rise has been pretty high. An investor would not be very comfortable coming in at such high prices. So whatever numbers or whatever estimates we have, it still is not crossing, double digit, maybe 10 15% of investor. It is still hugely driven by end user demand, and especially the upper end of the market is not so much of an investor driven market. Can you imagine somebody buying a 100 crore apartment expecting in next 5 years to sell it for 200 crores? Obviously not. So this is more of wealth preservation. As far as its upper end of the market concerned, the term is wealth preservation. They're not looking at doubling up the prices. But if they spent 100 crore after 5 years, 10 years, they're getting 110, they'll be happy. So it is not so much about investor driven demand. It's essentially the end users who want to really upgrade their lifestyle, who want to tell the world out there that I have arrived. So it is more driven by that passion which the transactions are going ahead, but nothing to do with investor side of it.
Right. And if I may supplement that last question, for example, in Gurgaon, we've seen these big sellouts, reports of 20-25% NRI investments and therefore investors. So is that a standalone trend? I mean, does it run parallel with anything else anywhere else in the country?
I suspect because NRIs are not so dumb to invest where, in any case, they are feeling the heat of a softening currency. So while the price rise could still be a reasonable, say 9 10% or so, but in front of any of such price rise, if your currency devaluation is going to haunt you in future, I seriously doubt if NRIs are falling for it yet. Unless your price rise would be 20 30% per annum, it doesn't make a sense for a NRI to invest in India yet.
Ghulam, pleasure speaking with you as always. Thank you so much.
My pleasure. All the best. Take care.